Kyle here with Factum Financial, and in this video I'm going to be breaking down the problem that Nelson Nash identifies in his book, Becoming Your Own Banker, Unlocking the Infinite Banking Concept. Now, this problem that he talks about multiple times throughout the book, I'm convinced is one of the money paradigms that when this clicks for you, this will change the way that you think and behave around money permanently, and this sets you off on a completely different wealth trajectory just by understanding this one concept. Now, I was 25 years old when I read that book, and I figured out this problem that I did not know existed until I read about it. And once that happened, it changed my entire view on money and handling my finances, which was one of the best things that I was ever able to learn is right from that book. So let's jump right into this and identify what this problem is that Nelson talks about in his book. And he says the problem is that you finance everything in life. Now, what does that mean, you finance everything in life? Here's what he says. He says you either borrow money and pay interest. That's called an interest payment. We're all aware of that. Or you pay cash and give up interest you could have earned. And that is called an interest cost, or you could call that an opportunity cost. And the interesting thing about an interest cost is that it stays with you permanently for your entire life. I'll put it to you this way. Because you paid cash doesn't mean you saved the interest payment. It means you also now have to go calculate what would that money have earned you if you would have kept it on your side of the wealth game permanently and you were earning some type of interest rate on it. And he says the problem is that all of these items in our life are financed by someone else's banking organization. It doesn't have to be this way, but it is because of the way we think. So here's a quick example on how this would break down. If you were brought up in a pay cash family like I was, we were always taught never borrow money because you're going to pay interest payments. So you'd save up and you'd use cash. But no one ever taught me about this interest cost until I met an orthodontist who was actually helping me identify this problem, and it changed everything for me financially. And so if we had $30,000 in cash and we used that to go make whatever purchase that you were going to make for 30 grand, assuming you could have earned a 4% interest rate on this over a 30-year time period, the future value of that would have been $97,000. So it doesn't just cost you 30 grand, it costs you what 30 grand could have earned you if you would have never lost control of that money. So the true cost was $97,000. Now, depending on how much longer you think you have to live, that only becomes more aggressive in the future. So I'm 36 right now. If I've got another 50, 60 years to live, that interest cost for me is so much heavier. And I think this is why when people learn this, they go, oh, I wish I would have learned this 20 years ago. And then their very next thing is like, I need to go teach the next generation, my kids this, whatever that is. Because once you see this, you'll never be able to unsee it. So let's go a little bit deeper on this. What's really happening is you got two options. And these are the only two options we were ever taught. If you're like me, these were the only two options. You got the saver, who's the pay cash family, or you got the borrower, that's the one that's going to finance. So the question we should be asking is, what are the benefits of each? There are benefits of paying cash, absolutely, and there are definitely benefits to borrowing money. And you could actually make the case for either one of these depending on where you stand. Now, the next question is, what are the costs? I think it's fairly easy to identify what are the costs of borrowing money from a financial institution because that's the interest payments we're making. But it's harder for us to calculate what is the cost of using our own cash unless you understand that problem that Nelson is talking about in his book. Now, here's the question that really matters. After all the auto purchases you've made, let's assume that you've been owning and driving vehicles for 10, 20, 30 years, however long. Think about all the auto purchases you have made in your life, whether you paid cash or financed those. Think about what that number is. The question I would ask is, how much money do you still control of the money that you use to make those purchases, whether you paid cash or financed? Now, when I learned this from that orthodontist over 11 years ago, I was really frustrated to see this visual on the screen right here because I thought I was doing the most important thing, which was saving up and just using my own cash. But if I continually do this and the borrower is doing this too, both of us will spend money on purchases like vehicles, and we will both end up with $0 at the end of this time frame, whether that's 10 vehicles, 15, or 20. It doesn't matter. You both end up at zero because, like Nelson said, all of these things are financed by someone else's banking organization, and you're either paying up interest or you're giving up interest you could have earned. Really, you're in a constant state of interrupting the growth of your money. So here's one thing that got me really excited about this concept of becoming your own banker, which was when I went and did the math and just looked at some of the averages, like, okay, assuming I'm going to drive 13 vehicles over my lifetime, like most Americans will, if I keep doing it the way I've been taught, option one and option two, either save up and pay cash, or option two is borrow money from a financial institution, I'm going to spend roughly $400,000 on 13 vehicles over my lifetime, and I'm going to have the same amount as everyone else, which is zero. Someone else is getting all of our money. So we got to think about option three. What if the option was you could store it in an environment that gives you very unique benefits? I would call those the 8 benefits of whole life insurance. And 2 of them are you get constant compounding of your savings because you can use a flexible loan provision to actually borrow against the cash value while your cash value is still compounding. As you make those same payments back to the insurance carrier, your cash is in a constant compounding state. So every time you reset this, you're going to be at a new high. So you can spend the same roughly $400,000 and end up with well over $1 million. Most likely it's going to be closer to $1.5 million, depending on how tough your financial behaviors are for most individuals. Now, that's what Nelson's talking about in his book. Doesn't matter if you pay cash or finance, someone else gets your own money. Why are we not thinking more like the bankers in this position to control this flow of money in our life and keep that interest cost on our side of the equation? So the question I would ask is, who do you want to be? You see, we've all been the saver. We're all aware that there's a banker and there's always a borrower. And here's all the bankers doing. They take the deposits from the saver. They lend money to the borrowers. They pay the borrowers pay the bank at a high interest rate. And the bank pays the savers at a much, much lower interest rate. And so if this works for something like vehicles, instead of having the banker be the middleman for the financing, what if we just became the banker and you controlled this entire flow of money? And if you go back and read this book, Becoming Your Own Banker, you'll realize it has nothing to do with investments or investing. This is all about control. Another way you could put it is this. Who owns the banking function? You are currently depositing money with some kind of commercial bank. I still use a commercial bank, just full disclosure, but I only leave like 3 months worth of reserves at the bank. Everything else long-term goes to my banking system. That would be my system of life insurance policies. Now, let's assume you're going to get like a 4% rate of return at the bank permanently, which is what you can get with life insurance. Now, what most people are doing is they're using the bank for all of their financing decisions, right? So we're either paying cash, we're borrowing money. The bankers are the ones that are really profiting from this. So let's assume you have a 6% mortgage. Well, that's coming right back into the bank. 7% on vehicles, maybe 8% on your business, 20%, 18% on debt. If you just take the banker out of the equation and you said, let's put in a life insurance contract right here, and then I'm going to be the one doing the financing, not the bank. This is what he's talking about. See, if you'll do that, like Nelson said in his book, you're currently financing everything in life. And the issue is everything that we're financing, we're giving up the interest cost and we're giving up the control of who's actually making money on that. And right now, it's the bankers. Now, we've never really been taught to think like the bankers, which is why if you read this book, initially it'll be a major paradigm shift for you. So let's wrap this up. Here's how this basically works. This is called the annual pattern of spending, right out of Nelson's book. He says about 20% of your income is going to go towards some type of automobile purchase, about 30% towards housing, and about 45% towards living. And the average American right now we know is saving about 5%. Now, typical financial advice is going to tell you, take that 5% you're saving and go put more risk on it, invest. And I think telling people to automatically invest before they're at the right stages of wealth building with the right financial behaviors can be extremely dangerous. That's when you're probably going to be consistently losing, like every 5, 7 to 10 years, if you don't have the right foundation and you don't have the right investing strategy. So what I would encourage everyone to do is, if we really look at this, where's the greatest opportunity? And this is what Nelson's talking about in his book. He says, on the left side of that equation, you got 95% of your dollars are just flowing through your hands, ending up in someone else's banking organization for all the hard work that we're doing. Well, what if we decided to flip that script on its head and you started thinking more like the banker, you changed where you save, you changed some of your money management habits, And suddenly that 95% can be kept in your control, and not only your control, but you can perpetuate that wealth from generation to generation. So keep watching our videos, get as educated as you can, because education leads to awareness, and awareness leads you to making better financial decisions for the future.